Central banks have two bullets in their guns: interest rates and money printing. With the interest rates at 0% and QE becoming quite predictable, most would agree that they are quite out of options. With the introduction of negative interest rates, the bankers have opened up a whole new level of aggressive monetary policy aimed at destroying the value of that particular currency. Prepare yourselves for an exponential disaster. You came here for the truth, so let me unveil that for you. The question I ask today is, can interest rates go below 0%? And of course, the answer is yes. Let's begin with Sweden. As we look at this, cutting the interest rates below 0. I really couldn't believe that this would actually happen. Of course, I believed it was possible, but the actual chance of a central bank bringing the interest rates down below 0 as a method to increase the prosperity, it doesn't make a single ounce of sense to me, but here we are. Let's look at this. Traditionally, it was thought that if you wanted to boost the economy, the central bank would reduce its interest rates. Normally, the rates offered on savings account would follow, and people would choose to spend more and save less. That is the traditional scheme that they do whenever they want to get people spending more. They make it less encouraging to save. This is out of the Telegraph, has some good information, so let's cover it here. There's a limit. It's what economists call the zero lower bound. Now, the reason I'm mentioning this article, the reason I'm mentioning this specific information is that this is going to become very important as the months go on and we go into the negative territory. Cut rates too deeply and savers would end up facing negative returns. In that case, this would encourage people to take their savings out of the bank and hoard them in cash. This could slow rather than boost the economy. It's basically taking more and more risk. People are worried for certain instances. They will take their money and they will do something else, whether that's putting it under the mattress or whether that's engaging in more riskier investments. And basically, what we have is at the bottom here, the central bank rates have turned negative. The rates offered on the bank deposits have followed. Yet rather than stuffing cash under the mattresses, people have left the money in the bank or spent it. And of course, if they continue to do this, the bail-ins will be ready and willing to take them, I assure you. Nowhere is the experiment with negative interest rates more obvious than among the Nordic central banks. Sweden, the first to dabble with negative interest rates, is perhaps the prime candidate for such experimentation. Lots of info in this article. I'm not going to get to it all. Just wanted to mention this. I have many people from the channel here living in Sweden, and they know firsthand how this is. If you are from there or know any insider information, please post it in the comments below. We all need to share that. This is going to destroy people here. You think that because they're more prosperous in this particular area that it's going to be okay. Well, the fact remains is that this is an experiment, as they're suggesting here in the Telegraph article, and it's going to get worse. You're going to see lower and lower interest rates, making it harder and harder to live our daily lives. This is out of CNBC, and we're looking at the Chicago Federal Reserve President Charles Evans. See what he said. A later liftoff from near zero interest rates will better help the U.S. economy, and the best time for a rate hike might not come until the middle of next year. Kicking the can down the road. I've covered it before, but this is now the Fed Reserve President here, saying that normalizing policy too early brings risk amid pressure on inflation from low energy prices and subdued wage growth. They can make all the excuses in the book, it doesn't matter. Every day there's something to be concerned about, so if you're not ready and willing to increase the interest rates now, you're not going to be ready and willing to do so in October, in December, or next year. And when they do, it's going to crash the economy. And that's exactly what they're concerned about. That's why they haven't increased the interest rates at this time. With an election coming up in the US, they need to really boost the economy in order to get this going. And I don't see anything positive in the news recently. This is just a very basic diagram that's in my book. Just wanted to show you this and make it clear, make it obvious. If you want the stock market to go up, interest rates have to come down. That's a very basic general terms, but that's the way it is. And it looks like this is continuing to be a continuing process, not just in the US, but others as well. Bring the interest rates down, try to get the stock market up. It's a failed policy, but that's what they're doing. Bloomberg's IPO index performance. Now look at this. All the IPOs that have been coming out recently have been doing so poor. In fact, this is the worst year on record since 2008. How many more indicators do I have to pile up here? As you look at all of these different indicators, this happens to be IPOs, but they're constantly saying, look, we haven't been this bad since the Lehman crisis, since 2008, since 2007, somewhere around that era, as we see how bad this situation has become. The global economy is falling. And this is just a couple of things I'm just going to touch on very briefly. Basically, the liquidity continues to deteriorate in the foreign exchange here. Different rates that you can see for yourself, but essentially a problem that extends worldwide. And this as well. Liquidity continues to fall in the Euro USD, US Japan, and basically you can see them all for yourself. There are 6 charts in this one for you to take a look at. If you'd like to, you can just scroll down and it will be in the description as always. Just wanted to show you liquidity is a problem. When is liquidity a problem? Generally, when we have a crisis on our hands, and that is happening right now. There are many different crises happening. Previously in history, we saw the Latin American crisis, and we saw the Asian crisis, and we saw the Great Depression. And it was all clear and defined. That seems to be a thing of the past, as we see hundreds of different problems that are occurring all at once. It's all coming down, and I'm seeing it here, trying to piece it all together, and it is just very difficult to keep up because there's so much terrible information that is coming through each and every day. I hope that you found this informative. If you did, please give me a thumbs up. Trying to put together as many good quality videos as I possibly can. I have so much more information to come. Trying to get back to your emails. I'm like 2 weeks behind on emails. Stay tuned. I will get back to those emails. Slowly I'm getting back to them, but they're just constantly coming in, so it's difficult to keep up, but I do try to reply to the comments as always, and I really do appreciate your comments and your kind words. If you found this video informative, please give me a thumbs up, of course, and you will also find my book, The Money GPS, even more informative. Just go over to Amazon. You can flip through the book and see if you like it for yourself. Take care.